All right, welcome traders to the live webinar with FXDD. My name is Chris from Elite Currency, and we're going to take a look at the markets together on this 17th of January. And we have New York open already for an hour. And well, let's take a look at the Forex market. If you have any particular instrument in mind, of course, feel free to reach out. Ask me anything you would like about current trades, past trades, open trades, closed trades, trade management stuff. Feel free to reach out. But I'm going to show you what I think is interesting at this moment. First of all, let's look at the majors, euro dollar and pound dollar. Then we'll take a look at the other currencies if they look interesting and if there's anything specific to discuss. All right. So with that said, here we go. Euro dollar. So we had a little bit of a corrective pattern here, and we're getting priced to move lower in this almost like a channel or maybe even a little bit of a falling wedge, as you can see here, with this particular trend line angle being at a weaker angle, steeper angle than this support, weaker angle. So that's a reversal chart pattern, as you might know. We already broke above that. We didn't break above the 21 EMA, and now we're getting a pullback. I personally think that this is a potential bouncing spot for a reversal to the upside. And if you look at my wave analysis, then if you looked at it this morning at the Elite Currency, for instance, then you could see that I'm expecting a reversal because of the potential ABC pattern is finished. This being a wave A, B, and this being a long wave C probably, all right? Or worst case, this could be maybe wave A, B here, and C. So doesn't really matter. ABC correction most likely finished in my view. And this could be basically a break, a first initiative for the euro dollar to reverse, right? It broke above this trend line. What I would like to see before really trading it, though, although I have my analysis favors the upside, what I would like to see, though, is a clear candle close above, at the very minimum, above 114. All right. So it hasn't happened yet on a 1 hour chart. It hasn't happened yet because otherwise there's still a risk the price can dip down lower, hit the 78.6 fib at 113.50 and bounce off that spot. That's what I'm a little bit worried about. Although a reversal trade, trading it right here is possible. What I'm worried about is a bounce at 113.50. Now, another approach could be is to use a wider stop loss and go below this bottom, right? Go with the stop loss below 112.92. Maybe like 112.85 or so, but that's already 100 pips. So I personally rather wait for a break of the 21 EMA and put the stop loss closer to below this bottom right here at 113.71. All right. So with that said, I'm still in a waiting mode, but I do think that the bullish reversal is likely either now or at the 78.6 fib, and that's what I'm waiting for. Clear break or bounce at these levels. So if it does finish what I expect, an ABC correction to the upside in this particular piece right here, we had 5 waves to the upside. So I think that here we're looking at a wave A. This is being right here. Current price action is a wave B, and we could see the start of a wave C to the upside. So what could be the target? Let's take a look at the 4-hour chart or daily chart even. So if we put a fib on the wave A, the upside could go all the way to the -2, -61.8 target at 117.50, in fact. All right. So let me take a sip of my coffee. So that is a pretty good space to the upside. The only reason why I would not be bullish anymore is if price breaks with a good candle close below 112.70. That's the only reason why. Otherwise, I think that this is still looking like a bullish territory to me. It is bearish. It's making a deep retracement, but ultimately I think it's going back to a bouncing spot. We have 4-hour bullish candles already, 2 in a row, and we have higher highs and higher lows. It's a slow start pattern here. The only thing what I'm worried about is that it could tag the 78.6 fib. So what I want to see is a break above this 21 anyway. Now, the best breakout is actually above 114.50. This is still semi counter trend here, basically if you really want to trade with the trend, you got to wait for a break of 114.50 and a long-term moving average, this zone right in here. What you're looking for, let's get rid of this fib because otherwise there are too many lines on this chart and I'm scared you'll not follow it anymore. There we go. So what you want to see is a break of that territory like this into the weekly pivot points, wait for a bull flag, and then a break. Then you're fully trading with the trend at that point. All right. So if you want to trade with the trend, wait for this break and pull back, flag, and continue. All right. Now, regard to the pound, and if you have any questions on the euro dollar, feel free to reach out. Otherwise, I'll just move on and assume everything is clear about my vision, at least. So pound dollar. Now we're at break even at this moment. All right, and I took the trade on a different FXDD account, but you can see that the pound dollar is in the bullish mode. Right, there was a bounce off the S1 with a bullish candle, and you can see that price broke above the 21 EMA. So this is what we traded, Mislav, my trading partner, and I traded. For those that are not following Elite Currency, you don't know Mislav, of course, but he's my trading buddy, and we trade our systems together. And we traded this live with ECS Live. For those that are from ECS Live, you know that. And we're at break even at the moment. All right. So I don't see any follow-up trades at this moment. I'm at break even. We're at break even. And that's it. It's a free ride at this moment. So will it hit target? We have a target at, what is it? Let me check. 130.90, right? Way far from here. I know. So, there is definitely, of course, a chance we might obviously miss that. But if it does go for a win, we're at break even. So it's a free ride, as I said. So either we're going to have, let's see. It's going to be tight. Obviously, we only have 10 pip space, but rules are rules, and the rules say that we have to go to break even at this point. So we'll follow those rules. I know that there is a pretty good chance we might get tagged out for break even, but at least we don't have a loss. At least it'll be 1 pip win. But if it does go for a win, the R2R here, the target is at 130.90. So we entered at 128.95. So we're looking at 200 pip, 195 pip target. And the stop loss is 128.59. That's basically 36 pips stop loss. So our risk is 36 pips, 195 reward. So let's do the math on that quickly. But it's going to be a lot of R2R there. Sorry, PC is a little bit slow, but I said 36. 5.4 R2R. So risking 1%, you just made almost 5.5. Risking 2%, you made 11%. So fingers crossed, it would be a great trade to have if this goes well. Now, pound dollar, has been a little bit shaky, wild, volatile, however you want to call it, due to all this Brexit news and stuff like that. I personally was more bearish on the pound because of this particular ABC zigzag. I thought there could be a follow through, but we got the break. We got actually here to break above the 21 EMA. All right. So this is the first break. This is the second break, and second breaks, as you might know, do a lot better than the first breaks. All right. So yeah, that's basically the pound. I don't think there's any trade possible at this moment. I mean, you could still it's right at the resistance spot. It's bounce or break spot. I would rather wait. If it does break below the 21 EMA, then that would change things, of course. And there could be a bigger push down, as I originally expected, personally. I was thinking that this is wave A, B, down it goes for wave C, and that could still happen, in fact, because it still hasn't broken above this top. It's at a decision spot right now. And we have good 4-hour candles, basically pushing away from the 21 EMA, but doesn't guarantee a follow-through. So if you get a daily candle close above this 2-day high, right, with a good close near the high like this, then yes, I think there's a good chance of an immediate follow through to 130 and even 131. But if today's daily candle turns into a bearish candle, then I think we're going to see this kind of ABC pattern. Oh, you don't see what I'm drawing, actually. I just realized. Let's see. Well, I'll just follow my cursor otherwise. A, B, C, right? That's still lingering at this moment. And that will only fade away, that danger, if we break above this top for the moment. All right, so that's quick overview of the euro dollar, pound dollar. Let's move on. Let's see if there's anything interesting. Dollar yen, not interesting in my view. Neither the pound yen that much. I guess upside is most likely at this moment because price is above the 21 EMA. So, if you were trading maybe lower time frames, 50-minute chart, there was a neat breakout right here. You can see pullback and re-break above the 21 EMA after the pullback. So if you're trading 50-minute chart in the London session, yeah, you had that breakout potential there. But at this moment, not that interesting. So let's move on. Euro yen looks more bearish. The yen pair I'm not really that fond of at this moment. Dollar yen is moving up. Pound yen is moving up. Euro yen is wobbling around the 21 EMA. Slightly bearish, I think. But if I look at the pound yen and dollar yen, they're not really matching. So I would probably just skip the yens for the moment. Euro pound, I'm not a big fan of anyhow, but after this double top and strong momentum, waiting for more info. Dollar CAD, I think, could be interesting for a potential breakout. Let's see. We have a blue candle closed an hour ago. That candle signals the fact that price is broken above the 21 EMA. And I think that, 1 second, folks. There we go. So it doesn't block the video too much. Good. Yeah, I think we could be looking at a breakout here. Let's take a look at lower time frames. Yeah, big wicks on the hourly chart. That does not look good. 3 in a row here. I was looking for a pullback and breakout. We got the pullback, we got the breakout, but the breakout is not looking that great. So, yes, dollar CAD is moving up, is bullish as I was expecting, but struggling a little bit at this point. So I think it's a little bit too soon to trade it. Could be much better to wait for retracement probably into, let's see. Let's put a fib from here to here. Maybe 132.75, 132.66. Wait for a bounce in that zone. Wait for a retag of the broken resistance. All right, Kiwi broke this uptrend channel with a good engulfing twins here, and price is falling after that engulfing twins. And 50 fib is close by. That could be a bouncing spot. No, I don't see any trade here. It isn't at support, but 2, there is not much space to the 50 fib. All right, Aussie is retracing. Not that interesting. Euro New Zealand. There we go. Let me put it from here to here. At the minus 272 target. Could be a bouncing spot. Something to think about. And pound New Zealand. All right. So if I had to choose, all in all, let's see, what could be the best setup? Looking at current time frames, I'm not a big fan of the yen, so I'll probably stay away from the yens. I'm thinking because I don't see any clear winner at the moment. I think maybe the euro dollar, although it's not ready right now. Or maybe one of these odd pound New Zealands I'm thinking about. Let's see. But there has been a doji last hour, so that's kind of losing steam as well, at least with the trend setups. We got a good 4-hour candle. So I don't think that the pound odd will retrace as yet. For those that maybe checked out my FXDD analysis with the pound odd this morning, you can see that 61.8 fib is the target, and we had a good candle close above the 50 fib. So I like this one, but just not right now because we have a 1-hour candle that's indicating a bit of a doji. So what could be better maybe is, let's make this channel. There we go. And could be better to wait for a retracement back into this zone around 179.50, 180. Wait for a bounce there. And then I think there is a pretty good target at 181. All right. And price should not typically break below 179.50 by too much. We have a candle low here, several candle lows. If you want to be a little bit safe, you can go to 179.37, 179.40 with the stop loss. Entry around anywhere between 179.50 and 180, depending on the bounce. And target 181. All right. So that wouldn't look that bad to me. I think that could make sense. It just doesn't make sense right now with this 1-hour wick. We don't know. I don't know if it will retrace necessarily into this zone. Of course, it might not. But if it does, I think it looks good for a continuation higher. All right. Second, or equally best, is the euro dollar, probably, in my view. And waiting for a break above 114.50. Or if you really want to be more aggressive in trading at counter trend, break above 114 with the candle close near the high, candle close above it. All right. So yeah, that's my view for the moment with regard to the currency market. I think from a discretionary point of view, probably pound odd and euro dollar look best. I'm not a big fan of those yen pairs at the moment. Third, maybe dollar CAD as well, by the way. Maybe. I'm still doubting, but yeah, I think ultimately it probably will retrace somewhat deeper up to this 134 level here, 134.40. Could be the bronze medalist. All right. So besides the Forex market, what else is going on? Gold is going sideways. That does not look good for the moment. It could be a triangle, but it's taking too long. So I think that if it breaks through the 1280, it should retrace deeper down to 1250. That in turn could be a bouncing spot. All right. And the continuation perhaps to 1350. Sorry, 1320, excuse me. Regarding Bitcoin, waiting for the break of 3,500 for a move down to 2,500. It hasn't happened yet. Oops. Regarding stock indices, they look to be at a resistance spot, in my view. 22,600 is a resistance spot and a bouncing spot. Oil looks to be breaking the second time below the 20-minute MA. That looks like a reversal and a bounce off the 38.2 fib and a potential for wave 5 to start to the downside. So if it breaks, I would say breaks below this zone right here, then it looks good for a bearish breakout and a continuation of the wave 5 with wave 4 already finished, basically. All right. And DAX, 2 weekly candles bullish, daily chart testing the 21 EMA, but you can see that the past, those tests have failed and price has bounced from them. Now it could be a little bit different because price has good weekly candles 2 in a row. And it has retraced and fallen quite far. So a retrace back into 11,200, 11,600, I think is still more likely. So this could still be a bouncing spot. But ultimately, I think we might get a head and shoulders like this. This being left shoulder, this being head, this being right shoulder. And we could expect an upside continuation into this zone, which I think afterwards still will be a resistance spot for a move down again. All right. Any questions at this moment? Feel free to reach out. Let's take a look at pound. That's the only trade that Mislav and I are in at the moment. And it could be that we hit break even. I'm not sure. Let's see, 128. Probably not yet, but it was close. So yeah, that could be a bit tricky. But yeah, it's now probably very likely to hit break even, I would say, but you never know. That's you know, that's the advantage and disadvantage in a way. You know, we're out of risk, so I personally like that. It's just a pity that we don't get the 5.5 R2R. That would have been cool, but okay. 2 pips remaining. Let's see. With regard to future trades, though, once again, euro dollar, I think the most potential for reversal, and I think pound odd the most potential for a continuation up to the 61.8 fib. Well, I don't see any follow-up questions, which is great. So everything is clear, but let me just add one thing which I forgot to add. Hang on. That trading for exchange, of course, is considered high risk. All right, so be aware of that, and of course, take that into account, and be aware of this risk disclaimer. And if you're looking for more webinars from us, from Nat and myself, and Elite Currency with FXDD, check out these links: FXDD webinars with live trading at the top and educational webinars at the bottom. All right, so those are the links. And let's take a look at gold, no problem. Let's see. Yeah, gold, I was saying that with such a lengthy period of consolidation, that we're probably going to see a reversal. If price goes sideways for another week, and somewhere halfway next week, at the end of next week, we get a breakout. So price goes like this sideways, right, for another 5 days or so, and then breaks out. Yes, then we're looking, even if it goes just sideways for 5 days, then it's already starting to look more bullish, okay? Because in that case, we're looking at a triangle pattern like this, and that would indicate more upside. If price, however, now at this moment doesn't look bullish anymore because the correction is taking too long. So at this moment, the reversal is more likely. In fact, this is so far weakness. The bullish momentum from this swing is over. And that's because of time factor. There are too many daily candles that haven't broken this top. This move up, this swing is over. It's finished. That's one swing. Now we're already in a new swing. Whereas a few days ago, we didn't know. This was still one swing. So continuation was still possible. Now that swing is over, which means that a retracement is likely, right? Because this is a bullish swing. So we're expecting a bearish retracement swing at this moment to the 50 fib or any of these fibs. But 50 is, I think, at this moment looking good. Most confluence because there's 1250 and a long-term moving average. You know, when you try to assess which fib is most likely, you never really know which fib is most likely, but you try to make the best guesstimate based on confluence. So 50 looks good. And I'm expecting a retracement because of the swing, the fact that this swing is over. But if the price goes sideways for another 5 days, then that means that there's no sellers. There's no downside, no reversal pressure. And if there's no reversal pressure, then a continuation is becoming more likely again. And that has to do with time factor. 13 days of sideways movement. This is 1, 2, 3, 4, 5, 6, 7, 8, 9. So that's sometime next week. Brings us into Tuesday, I guess, or Wednesday. Yeah, and then a bullish breakout is starting to look better again, because then that means that this is becoming a supply-demand zone where prices are going sideways, basically. And so then what do you have then? Then you have upside momentum and you got sideways movement. So that's actually then looking like a potential bullish breakout like this. So New Zealand yen, let's see. Head and shoulders, all right. Let's see. Yeah, I think if you look at the daily chart, you mean maybe this level? I think we had another pair that had a similar pattern. I forgot which one with the head and shoulders, but can't recall which one at the moment. Yes. Left shoulder is way bigger than the right shoulder. So it's not an ideal pattern, but yes, generally speaking, I agree with your idea, and it could definitely be a bouncing spot. And 38.50 flip could be definitely a level to think about for reversals indeed. That's goes along with the New Zealand. Maybe that was the pair. New Zealand. No. Sorry, I'm confused with some, but it doesn't matter. New Zealand yen, yes, I think that we're looking at a retracement at this moment. The retracement could go into this zone, these fibs around 72, 72.50, and then bounce for continuation up to 77.50. First pause at 75.75. All right. Good stuff, folks. Well, thanks for joining. We're going to be back with more webinars, of course, soon. Wish you all great trading and cheers.